to today's live webinar in recognition of International Day for Disaster. Thank you so much for your patience as we resolved a few technical challenges here. I'm Elizabeth Riley, Executive Director of the Caribbean Disaster Emergency Management Agency. This year's theme, Fund Resilience, Not Disasters, is especially relevant to us, a region identified as the second most hazardous. Climate change is already happening, and we are experiencing unprecedented and impacts. However, globally and in the returns remain heavily skewed towards disaster response and recovery rather than disaster risk reduction. The UNDRR advises fire-related funding worldwide is allocated to disaster risk reduction and preparedness, while over 90% on emergency response and post-disaster action. This is despite evidence that every dollar spent on disaster risk reduction and $7 in avoided losses is therefore optional for us. It is an urgent necessity. Through the comprehensive disaster management strategy, collaborators continue to champion a integrated approach to disaster risk, guarding lives and this robust evidence. The questions remain: aren't we seeing a significant financial flows towards prevention and resilience? And what opportunities exist to make this? Joining our conversation today and helping us to impact complex questions is a distinguished panel of, so let's welcome them. Ms. Michelle Forbes, Director of the National Emergency Management Organization in St. Vincent and the Grenadines. Welcome, Michelle. We also have Thomas Coward, who is the United Kingdom Development Director for the Caribbean with the UK Foreign, Commonwealth and Development Office, to the discussion. Welcome, Tom. Good to have you. Operations Officer for Environmental Sustainability at our region's Indigenous Multilateral Institution, the Caribbean. Hello, Paul.
Hi.
And to my immediate left is Mr. Randy Graham, the Chief Operating Officer at CG from the insurance. For the next hour and 15 minutes, Fund Resilience, Not Disasters, innovative funding frameworks and public-private partnerships can accelerate this change. Get started with you, Michelle. Michelle, St. Vincent and the Grenadines has experienced its fair share of options. In light of this, the government from funding disasters to funding resilience, and also a bit about the specific challenges that governments are facing in reallocating limited space towards proactive disaster risk reduction.
Thanks, and good morning to everyone. As we unpack the whole funding resilience and not disasters in particular, we have had impact. And as we unpack the funding this morning, please remember that we have not event. And I'll just remind us of two, the volcanic earthquake, which we had damage and loss of over 634 million PC dollars. Kimberel, most recently, $870 million damage. Uh, damage and loss. And we have not, while we pivot, we have not recovered from a single disaster in the last 10 to 15 years. Our government here in St. Vincent West, using the whole comprehensive disaster management database we have developed, allow us to tie to recovery. And I will share a few that we have started in St. Vincent. The disaster risk financing a few years ago, and in this we are able to leverage at least US $20 million on the to be able to respond, recover, and plan recovery for disasters. We also established a contingency fund in 20. This fund generates around $13 million dollars annually that we use post-event, more recovery, and fully on any owners. We also, to supporting the institution that eventually support us throughout the phase continuum or cycle from preparedness to recovery. Agencies such as RSP Center, we have an established fund that takes 1% of our telephone charges that fund, so we know that we can to funding the region's disaster reduction, not only in St. Vincent and the Grenadines, but in the region. So we have different mechanisms to utilize and have in place support disaster resilience program. And when I say disaster many our topics only look at the comprehensive disaster management, and we have used various funds, various donors to really support our recovery. We are seeing more that financing has to be home. Just that we face real limited financing. It's the social needs against the physical infrastructure needs that you are seeing. When you have an event, your broken bridges, you can homes that are damaged. We often do not see the social impact that we are having, the livelihoods impact, a difficult task to balance and prioritize the social protection, the social assistance, and we have different partners who support. It has to be a bit in terms of finding that resources for yourself. So it's a constant in reallocating resources, because you have to a building now versus 10,000 persons out there needing some financial assistance, needing some income. So some of the projects and programs and donors that we have come, it takes too long for these projects or somebody that they need and you want 3 years to get that support. And some of the programs are too long. So while we balance that, we have to find that buffer where we can actually get to support some of the social needs. It's really, we have to be a bit more proactive in terms of our funding as one of the leading countries in terms of leveraging our financing and finding a different really bounce forward, build back better, and continue the whole continuum of disaster.
Michelle, and I think that was such a rich response, and many of the things that Michelle has seen across the Caribbean region so really are really the cumulative impact of successive hazard events in country and the challenges that poses for a country of not just response but also with respect to recovery, and respect to how the government of St. Vincent and the Grenadines has really taken approach to the whole issue of disaster risk financing, that resilience investment in addition to meeting response and recovery. So in countries, we turn to our partners for financial support. And one of the critical financing partners in the Development Bank. So I'll move to Paul. Michelle's contribution and challenges being faced by St. Vincent and the Grenadines, and we're well familiar with these. So, as our only Indigenous multilateral, is the CDB in its financing approach to prioritize resilience and proactive risk reduction rather than disaster response? And also, what steps is the CDB taking to ensure that is accessible, affordable, and tailored to.
Thank you. Thanks very much for that, Liz. Good morning. Good morning. The Caribbean Development Bank, as you know, as you said, only Indigenous. We're proud of this, and we are seeking new ways. But first and foremost, let me bring greetings on behalf of our President, Daniel Best, join us this morning, sends his greetings, and to be under the leadership of President is charging a very bold, put together our 2026 to 2030 formative vision to drive innovation, acceleration across the region, and this vision is rooted in enabling our Caribbean people, economy, and thrive in the face of evolving challenges. So DR Day very much coincides with this. We utilize our disaster management strategy and operational guidelines. And when we speak about scaling up this and private investments are risk-informed and resilient, this is the management strategy. Actually, when we revised it in 2020, we significant shift, and we became more proactive. We emphasized the issue of being ready, to move away from the response aspects as well as ourselves. And so we a lot more proactive funding in it so that countries going forward. The bank has long recognized the importance for a holistic approach and we housing and channeling financing support this action in the region. So what have we been doing? Our portfolio includes investments. So we're trying to push countries to, hey, let's get going when the event happens. We have put focus on climate resilient infrastructure, security, and resilient energy resources. We have risk-informed project preparatory and disaster for all of we are doing in-depth climate risk and vulnerability assessments where necessary. And so we also take into consideration climate and disaster, and we ensure that our infrastructure designs reflect these going to support our country level reforms, into public investment. So we go in country, encourage the countries to not only for all the projects they take, they are informed by the various risk assessments that are done. We help our countries with land use planning, building, budget tagging for disaster reduction, so ministries can plan and track ending. We created a disaster response policy-based loan out of our revision in 2020. National instruments which rewards ex-ante policies. And I'd mentioned the government of St. Vincent and the Grenadines utilized our disaster risk management march this year to do that in a while. And so we were quite happy to provide that level of assistance. But overall, what we're also doing is incentivizing our BMCs to adopt an active approach, providing grant resources. We are senior resources to give us be and able to respond, and more importantly, to facilitate faster as well going forward. And as Michelle has mentioned about layering, we also encourage the risk layering, and we provide support for our layered measures. So what we want is that your emergency liquidity does not crowd out pipelines the moment a storm or the earth. So when we speak about what steps are being taken to ensure that resilience finance, we tailor our terms, transaction design, and for our clients in the Caribbean. We recognize that every of our BMCs are different. So we individually, from the outset, that what we provide for them is best fit. We source concessional financing, as I said before, and we look for longer tenors and risk reduction milestones. So resilience doesn't worsen the debt. We have to have increased our access to green funds. The CDB has it from 50 million to 250 million. We are also as well. And so we are various aspects providing these funds to our member countries. We look at accessibility, project preparation, dice templates, and hands-on implementation systems to reduce costs. We recognize that our countries do it, so we are there for them as much as possible in not only the but also in the implementation of the projects to ensure that they are able to. We also strongly believe operations are sized to small markets, which is consistent with CDM framework, and we have an emphasis on water, power, and transportation systems. Again, we are looking at Caribbean, and most important, and recently we have updated our private sector policy. We are looking at capturing private capital. We do believe that our sector has to play a significant role. So in boosting their, we are also looking at our role in the wider. So the CDB is being very focused, very particular, looking at our countries. We have close working relations to ensure we can understand what is happening, and we special development, so SDF cycle 11, and again we have targeted monies for the CDB strategic plan is built on facts and on getting out there, being proactive, and encouraging countries to get into position and get there to support them in specs. So I'll leave it there for Liz.
Yeah, much for that. And what I'm getting from that mention is that CDB is really seeing it as a driver for the Caribbean. Important to play, contrary to the other work that partners are doing at the level and also SEDIMA. Also, what was very important for me coming through is the country's approach.
Yes.
And what I understood is that you taking into consideration some of the issues around country capacity in terms of the type of support that the bank is providing. Third, you're giving options. A diversity of countries actually can access, trying to make sure you have something that is potentially for everyone. And this is really commendable. So thanks so much for that. I will come back in a little bit. So, of course, I mentioned another important dimension of financing is from our development partners. And so we have Tom with us, FCDO, representing many partners who works in this space. So, Tom, a little bit of a curveball for you, because the global development financing landscape has shifted. That this shift, we would dare say, accelerated since January 2020. Can you share with us how that geopolitical global economy is influencing not only UK FCDO, but our donor funding priorities for resilience, first of all, to tell us a little bit about the types of strategies that donor agencies can finance in that, given this very low 10% that we understand is now coming in that direction.
Good morning, everyone. Look, you're right. We're living through a period of intense, profound global transformation in recent, with unprecedented lockdowns across the world. We catalysed the largest rearmament of European powers since World War II. In Africa, in Asia, in the Middle East. Economic headwinds are intense. The World Bank has just predicted this will be the slowest decade of growth since the 60s. And at the same time, the Nature and Climate Prime Minister Brown of Antigua and Barbuda captured the urgency of this moment really. The climate crisis is not just a weather forecast for small island states. Reality, overlapping and many countries have been making difficult decisions to use their aid budgets. The United States, most $30 billion cut development spending. Netherlands and many other countries. In February, of the UK made the decision to cut funding from 0.5% of GNI to 0.3%. Did so because an urgent increase was needed. In response to most of that development envelope that we have, how we can to set a strategy makes best use of every single pound for our countries and for the UK taxpayers. And what is clear is that climate change and resilience are at the very heart of this. The Deputy Prime Minister came out in his aspirations without climate resilience. The UK is acting. Since 2011, the UK has supported over 130 million the effects of climate change. We remain one of the largest global funders to climate adaptation, and the UK is still committed £6 billion in international climate finance. That's between April 20 to March 2026. And we're tripling our adaptation. This is obviously crucial to how we work with partners. We want to focus on building mutual respect and shared objectives. If you just listen to the UN General Assembly's microcosm of how Caribbean leaders are talking about this, resilience was at the heart of it. So we're proud of the work that we're doing, from supporting the Bridgetown initiative being championed by Bob Erdis and by others in the region. £350 million in climate resilient infrastructure. Act with partners, together with partners and with the region.
Thanks so much for that, Tom. And I know this is a very difficult period globally and has been challenging all around. For countries, the center of the climate crisis, but also for the country to support us address this challenge. So it is the posture, heartened specific intentionality in maximizing use of funds towards. I think this is very much commendable, but also in listening to the diversity investments that you're making, infrastructure, and this was all about even from the CDB side in terms of the investments that are required to the region. This is a big area of the. I'll come back to a couple of other matters in a few minutes. But let's turn now to a private sector lens. So, Paul, private sector policy, which the bank is, a number of our development partners very much in alignment with looking at opportunities where private sector can become involved. And you sit at the helm of CG United in the Caribbean space, and also geographically quite extensive. Insurance industry can advise reduction rather than focus on disaster best known for. And in addition, can private companies from this company insurance sector be incentivized to co-invest and develop? Obviously, partnership is going to have to be a big part of how we work going forward.
Thanks very much, Liz, and welcome to and for having me on this very esteemed panel again. Try my best. I was in the Caribbean when representatives, the first thing is making the insurance cheaper, or advise persons to take out more insurance. And we understand that, but if we want a decade and more, we've seen attempts at reducing insurance by 10-15%. We've seen attempts at making for insurance, but it has not caused the penetration major way. In every hurricane we've had in the last decade, which can impact no more than 30% of the property damage has been covered by insurance. Most of the economic damage is not covered by insurance, and it creates a massive funding gap for us in the Caribbean. We see governments, we saw the St. Vincent government in Beryl, Maria, Dominica, we all have to go for external funding. We have to find ways to generate income to fix that funding gap. It has not expanded any way to solve the funding, but incentives. And I think you're absolutely right that, and the title of this session today is the perfect reduction. And it's had 50 years of experience and catastrophes in the that we can use that data to help incentive. I know we are an insurance company, but reducing this, and we would prefer to focus on selling insurance. To be honest with you, our addition is because of what we have seen in the Caribbean. The construction types, they're there from the beginning when we are watching the construction, ensuring the construction, we see it in complete. Then we are there 2 days after the damage. We see what the hurricane is doing to the property. We see the time that is to rebuild. Families can't their home. Companies cannot restart. Countries cannot reopen. Economies are all mention it. The lifetime to normalization, as it gets lots more destruction, and it creates more hardship for us in the Caribbean. People can't get back into those. I think what we would like to do that the insurance sector has, the claims officers, we are there, we are out, we see how important importantly, that are not damaged. We just have very little damage. At 230s, we would be in an absolute mess because of construction types, differences in application. The focus on reducing damage at the beach is a much better incentive than that the insurance sector has from responding to these hurricanes across the is that we can use that information to incentivize individual governments to put the work in to stop the damage in the first place, fund the recovery in the second place. For me, it's a much better incentive for cities to realize the benefits of that versus, offering them an 11% discount on the insurance premium, which is just going to create. So I think it really is a circumstance where we have information that monitoring partner with the right and creation that can incentivize persons to stop the damage, build in the correct ways, get the company set up in the correct ways, find ways to build so that we have time like the event. That's the real incentives in our view.
Thanks so much for that, Randy. And that's the insurance penetration. I know we had talked after Irma and Maria, the statistic is still the same. Still only 30% penetration even after the experience. That is quite telling.
Yeah.
And I think it points to the that you were sending on the role of the insurance industry from an advocacy perspective too. Really that it forever is going to be just a part of it. And I think that's an important message coming through from what you said. I also heard very clearly about the practical role that the insurance industry can play to get the evidence, risk-informed investment data that is held by companies. And I think this is something to explore a little bit more. I know we've been talking at the CARICOM data policy for the region and how do we make necessary data really accessible to the entities that require it to move. Some of the live questions that we have before we circle back our panel, the other areas we wanted to explore. So we have two questions on the screen. I'll take. The first is, how receptive have Caribbean governments been to the idea of funding resilience? And I'll make sure that quick. And then, Paul, of course, there's a follow-up question for the CDB, and I'll come to it, but you can prepare yourself to respond. Michelle, response to our question.
The question, please, Liz.
Have Caribbean governments been to the idea of St. Vincent?
We have a choice now. I really don't think we have a choice in terms of over the years from being impacted, that we really don't have a choice. And I think some years ago when the disaster office was, for example, pushed contingency fund, we didn't have it until later on when we started seeing some of the impacts that we have been having. So I don't think we have other trend. The governments have been forced to become receptive, where strict policies and strategies that can really address countries.
Thanks very much for asking that question. And I'll just pivot to Paul. With respect to the CDB, there's a question about how CDB conversations with the governments. I think you alluded to this one, then we'll circle back.
We actually have a very formal, structured. We have, and the other MDBs also do it. We have what we call a country engagement strategy, or CES, and every 4 years, remember, and we walk through with them their development, and we look at different spheres, from economic, tourism, and we way forward for the next 4 years. In particular, for the last 3 to 4 years, we have been putting a stress on disaster risk reduction, climate change, to face the realities of what's happening, So a key pillar of that is climate change and disaster risk reduction, with the focus on the ensuring whatever activity they get into is, and this is why again we make mention that every activity driven by the science, very important, and I like this data coming up again, also ensure that it is reflected in the design. So not only information, but we want to see it reflected in the design to ensure that it is going to be more government. It's an on all of government, element of the government, not just with the Ministry of Finance.
Yeah, thank you. That last point you raised about not just the Ministry of Finance, because it's really about all of government engagement.
All of government approach,
so
yes.
I'm going to stick with you, Paul. So let's delve a little problem. So you talked a bit coming out of on strengthening the partnerships with the government. Now, heard Randy's perspective from the insurance, and he's like a long-term partner with the Caribbean Development Bank. So how actions that bank is taking to the relationship drive systemic resilience financing, and how are multilateral development banks really balancing the need for discipline with the need of scaling up resilience investments in highly vulnerable?
Okay, Liz, thanks so much for that. Partnerships have mainstay of the CDB over the years. It's anchored in our strategic plan. It's a part that we do, because we recognize that the CDB on its own, we are a bank, there are great needs in the region. We recognize that players in the region can work together, because what we want to ensure that are not faced with duplicating the efforts, going to different partners, asking for. We work very closely with our partners, try to coordinate policy and with the implement across the various. So we for the issue of the country management strategies, where we identify the priorities for intervention, and as I said before, the climate and disaster resilience aspect of a significant reality that we face. We also country strategies and public investment pipelines to hazard and risk diagnostics and embed disaster risk reduction in the fiscal frameworks. We're coming back, matching the science is on the ground. And the bank over the last 5 years has addressing the issue of the data into the blue. And so it's part of the partnership of working with the programs. So if we look at our regional entities like SEDIMA, our disaster risk management program is driven by the comprehensive disaster management strategy of SEDIMA. We also framework and other elements of DRR are implement activities that we do. And so we very strategically for regional institutions, SEDIMA, College of Meteorology and Hydrology, the University of the West Indies, other entities, to bring them on and to ensure that we have a strong institution. Again, it served us well in this new sphere, where we're seeing less information from outside, even incentive for us now to institutions are able to stand on their own and to provide the information Caribbean specific, and that is why we support our regional institutions. So we include institutions developing data sets to inform the planning and policy, which is a significant aspect. Management strategy, we use it as a guide, and CDM country work programs for our countries. So what we do, not just partnering, but we are utilizing systems that our have set up in country. So for the Scientific Research Center, support the networks that we're in discussions with St. Vincent on issues like that. And so we utilize what our partners are doing to bolster it. And we are working with the Caribbean Meteorological Organization, assessing green climate funds for Trinidad and Tobago and Belize. We're going to board meeting to fund a $24 million project, which is looking at early working with the players on the ground in the region. Support to CDMA in finding at the national level has been ongoing. CDMA has been written in partner in our disaster management. We ensure find assistance across the board. Disaster risk financing governance through platforms like the CDM Council and the Finance Summit. Only recently we had with the UK on disaster risk financing on this element, and we're looking at how we can partner and further. These are a real live active talking about ensuring that things with private sector. Private sector led growth. We have a very strong within the bank, strengthen those elements, she trades, the MSMEs, and other elements. The bank seeks to do that. We want to expand the income at loans at concessionary rates, because we know the reality is many of our can't afford high interest rates. So we're looking at to do that. And with the MDBs and sponsors, and we co-harmonize risk screening, environment costs, and politics, and we seek to incentivize these to disaster management approaches and to coordinate delivery, country-driven. What we do at the bank, led by the country. It's not that CDB sits down and dreams up a program with our countries. So in balancing the legal discipline with the urgency of scaling up, the risk feasible, and we prioritize protect and again work with trees. We prioritize risk reduction our projects by how well they are. We look at and to protect within the countries, and we seek to keep debt. How do we do that? We blend grants with concessional finances, and we sequence our reforms to serve the debt because while scaling climate investments within. And a very, very big issue now we are focused on again. When we put in, monitor, track, and report to ensure that we are making the impact that what we're supposed to. So, without sacrificing fiscal prudence and credible fiscal with tailored innovative financing and disciplined high-quality investment, the bank lower the costs of concessional fine, as we said, and we work with our countries and particularly the Ministry of Finance to ensure that the systems are in place, that they are able to provide, receive the funding. Because many countries will be concerned about that. So multi-aspect of goes in. Yes, you roads, you need schools, you need hospitals. Recognize that management, the funding, in order to get value from the funding is important. And aspect as well, that assistance to ensure that there's all around approach development financing.
Paul, thanks so much. You know, and I really am appreciative that you've brought back into focus the fiscal realities of the state,
Yes.
the level of indebtedness, which is a feature and landscape. We're in a situation where we're highly indebted. We're also highly vulnerable. And as Michelle indicated at the start, we're is really compounding the indebtedness. So I think it is very CDB's program to the fiscal realities of the Caribbean space. And I think this is that comes from having an indigenous development that the countries are facing and seeking to address it. But what I also drew from your intervention, partnerships. And I work at SEDIMA, and we're all about partnerships. In fact, we can't hear partner countries. And in the vein of that, so I want to bring Tom back into, this is a very important ordeal. So Tom, can you share with us your perspectives on how partnerships with regional institutions like SEDIMA and others, and all the Caribbean Bank, to drive sustainable financing? And we heard Paul give it in terms of the collaboration already between the UK and the CDB. How donor aid and resilience funding priorities, we heard that a little from the CDB as well as the community needs.
Absolutely, thank you. Well, the UK Caribbean, and we're really proud of the depth of our partnerships with the regional institutions and the multifaceted, spanning a whole range of areas. Carib Forum, Economic Partnership Agreement, she's driving trade, jobs and incomes across the region. I work with finance and helping countries finance, CCRE, catalysing renewable energy investments across the region. I mean, focusing on the CDB mechanism, our partnership with is vital to us and a vital pillar of what we do across the Caribbean. The third largest shareholder of the CDB, with a joint largest shareholder from outside of we take up CDB and crucially, we were the second largest contributor to the Bank Development Fund, looking at supporting poverty reduction and human development across the Caribbean. Outside of that, we partnered with a range of bilateral programs, including £300 million grant financing for resilient infrastructure across the Caribbean through the UK Fund, delivering roads, ports, agricultural investments, resilience, driving inclusive growth. We deeply value our partnership. After Hurricane Beryl, we're so proud of the work to support deploying specialists across the region, assisting Vincent and the Grenadines, from emergency operations all the way to needs assessments and getting them. We're really proud that the UK can help deliver some of those impacts through your work. And partnership is not just about funding, just about, well, how do we do that? We work with regional institutions to understand what the needs of the relationships, to talk to countries, and we take that really forging partnerships. So both through the regions and with the partners across the region, listening to build real partnerships based on trust, based on shared goals and shared to do it. Just showing it's not about, the UK special representative for climate, Rachel Kite, Region Week. She had fantastic fantastic conversations with the CDB, unlock more finance, how we can the private sector, how we can bring together cutting-edge technology and energy for the region, drawing on conversations that she's having with business, with climate leaders, with finance leaders, with leaders across the region. She went on to St. Lucia for a pre-COP to talk to leaders, negotiators from countries across the region to understand what their aspirations are, what their desires are, achieve, so that the UK deliver together in partnership. Don't just be in words, but in actions. We want to be a partner that helps provide practical solutions, supporting adaptation, resilience, supporting the energy transition. So we really want to be a partner that helps the Caribbean and design and deliver Caribbean-led solutions.
Thanks so much. And I know you didn't explicitly mention it, but you have another vested interest in the Caribbean because many UK overseas space, and we have shared challenges. These territories, in fact, 5 of them are states, and so we share very deep bonds over time. And I think here the scope of the partnership line, and I must say that this has opened my eyes to the breadth of the UK interactions, the areas that were mentioned with the CDB, certainly not all. And it's really heartening to hear, for example, I knew about the infrastructure facility. I didn't fully understand the size of it. Into 300, significant in terms of the investment. Recall the critical role that the UK has played in being a partner in advocating. I remember you held the president and the COP president actually to the Caribbean and met with key institutions like SEDIMA, really to understand the Caribbean messages which needed to be carried and conveyed. So commendable. We really thank you for that continued. So continue then a little bit on the partnership vein, and I'm going to pivot to Randy. I am seeing on screen, which I'm going to come to Michelle in just. I think Michelle might be best positioned to NGOs, etc. But I'm going to pivot to Randy and a little bit more into the partnership discussion sector. So, can you, there's a lot of conversation about reinsurance and international insurance markets, many things that the layman not typically and really honest, right? So, can you explain a little bit about how reinsurance and the international insurance market a role in the financial burden of disaster? I know it's talked about every time, but maybe it's a little remote for most people. So maybe you could explain a little bit about what happens there. But then on the partnership piece, like SEDIMA, to align your products with resilience priority explore as well.
Yes, I mean, not so that I understand reinsurance any better.
Randy, this is not very comfortable.
Right. Look, we have some excellent insurance companies in the Caribbean, very good ones in the Caribbean. Lots of experience in the Caribbean, they understand the market very well. And remember we said earlier that whether the properties actually carry insurance in the Caribbean. If you look at what we have insured across the Caribbean, we have in excess of this is US dollars, in excess of $100 billion in across the Caribbean. We could not do that without the support of the reinsurers. Most of the Caribbean insurance companies are dominant in the Caribbean. We don't have the capital dollars in losses. So we buy and rely heavily on our reinsurance partners. More from the UK, big part, Canadian player, the Canadian reinsurance companies plays a big part. The best way to understand they are actually insurance or insurance companies. So we sell the policies to those on the claims that come from hurricanes and so on, not actually coming in from outside into our system to be able to claims. And because we don't have the capital in the Caribbean, we rely on insurance partners to continue that support. So as the Caribbean wanted to expand its purchase of insurance rather, continue to get support from the reinsurance partners, which is important because, you know, Michelle mentioned it, our Caribbean governments are strapped. You know, we have to fund before limited. It is almost unfair to keep asking governments to fund responses on individually. We can't rely on our governments to do that because they are competing, competing that we can take some of that pressure off the government and use the outside funding to fund the rebuild. That's what we want to encourage. But I think we have to get to the partnership of what insurance companies have and what we can do to partner with some of these. Have to hurry again. What does resilience really mean for these people, right? You see one come by a hurricane, neighbor, no damage. Ask us now, what this means? Well, it means your construction, your broken straps. This is real. This is daily life living experiences. Do you have a roof? Did you have windows that can stand up to kings? Sealed. Those that have sealed foundations are appropriate with the hurricane. These survived the hurricane. Those that were built with these things did not survive the hurricane. Properties built in the Caribbean to stand the hurricane before the event actually occurs, and we can share the information of what the building, which buildings stand, which buildings don't stand up, so we can share what the buildings need. When we talk about resilience and every Caribbean, it means retrofitting. It means or good retrofitting existing because the buildings are already up, they're already built, they're already in the Caribbean, but not European standards. So we program retrofitting into the buildings so that 90% of our buildings in the Caribbean are retrofitted for hurricanes. Hurricane comes because it will come. When a hurricane, we don't have 80% of our buildings destroyed by the hurricane. Stand it. That means that the time to recovery is much shorter. Yeah, we only have a much shorter time to recovery because we're not asking the government recovery because we have the expensive recovery to fund it first. What we have to do, I think, with the partners and what on the insurance side. But I think both on the resilience front and on the key role to play in some of the financial pressure off the government, but also a key role to play in sharing information with our funding partners so that we can fit in across the Caribbean.
Thanks for that. Give you a little follow-up.
Sure.
So, within the Insurance Association of the Caribbean, for example, about potentially the retrofitting actions taken or building in accordance with the building standards and codes, and if there is a conversation around that conversation, how you can incentive, how premiums are calculated. Could you say a little bit about that?
Yeah, absolutely. You started on the retrofitting, on standards, building codes. The insurance sector is very keen to have these building codes pushed across the Caribbean, but we recognize that will set the rules. That will it has to be sponsor program in making building codes mandatory, if that's what the case would be, to get compliant. What we construction building codes across the Caribbean. That's what we starting incentive was that, and we have started it. So right now, an insurance policy, a motor carrier, and you say that you have hurricane structure roof, or that you have those that have been built, you get a discount of your premium. And we are working if that we get to building codes across the Caribbean region. They're clear that what we have seen following hurricanes is that if you have building codes and building standards, those buildings are much better against than ones who have not been built standard. And there's no doubt about that.
Yeah, thanks for that, Randy. And colleagues, key message, because we can see that the insurance sector, which I have to say, Randy, lashes. I know I work in the business. I know the insurance sector takes a lash. What your insurance industry is already looking at initiatives, taking steps to see incentivize types of actions that can make our homes more resilient and other types of resilient, and definitely very commendable. So pivot to Michelle. Michelle, we have not forgotten you. Not forgotten you. Michelle, first we have on screen, I think you may be best poised to respond to. So the question is, best influence donors and governments, I'll come back to you as well, invest in community disaster strike. So I'll take Michelle, then I'll come to Tom, and I'll also ask everybody to start thinking about wrap-up questions. I may have a follow-up for Michelle, but we'll start statements. Michelle?
Yeah, thanks. NGOs have a critical, and we'll go back to the whole prioritize of our country in terms of building resilience. And our programs at all levels must look towards the areas that are prioritized and the communities also that are prioritized. One example of a project or program that supported a program that we had in St. Vincent and the Grenadines, the volcanic eruption. We were partnering with the Seismic Research Center and a host of other cities around the world over the last years in terms of building our resilience hazards. And the project from under this from and that allowed us to work in the communities along priority line. So it fits into the national priority, it fits into the national development plan, it fits into the country work program, and also the sectoral resilience. And I think with that whole across all of the sectors, all of the bridge, their support. And I'm using that example because if it was continued work in the communities prior to the eruption in 2021, we would not have good response. And I just want to tie that together because it's really building our resilience at the and the national. Community structure resilience is weak, the national support, but it must be consistent with the national level in terms of our priorities.
Great.
Thank you, Michelle. Michelle, such an important point there because as of the full national system, and it must be plugged into the conversational priorities that are, in fact, we often encourage at CDEMA when we support our level that this should also be a part of that country work program because it's important to see what are the areas in its programming that the NGO provides. Of course, they're very critical for the community. So, Tom, any quick words with respect to NGO engagement with partners? Access to is usually one of the key considerations for the.
Look, absolutely. NGOs and communities questions around community resilience. To understand actually what communities need, actually what we need. You look at the power of these community voice globally through the COP process, the UNFCCC, the role that Van Watt and climate activists, young, inspire diversity in some of the movements, what's going on globally. Work with us. We want to listen. We need clear advocacy, clear messaging, evidence, bringing communities, bringing evidence that others collect action is needed.
Yeah, thanks so much for that. Screen for me, which I'm going to come to in just a moment. But let me just, because there were a couple of we want to explore a little bit more with Michelle. So Michelle, we talked about, you'd raised the points in your social sides that need to be looked at. Talked about, you mentioned on the NGO question, NGOs, you emphasize unity. So how can government balance immediate social and economic needs with the long-term imperative of finance results?
We cannot think about this only after we have an event. We have to start, and I know members of the panel mentioned data-driven events and means, and I know there has been the quest in terms of local data, being able to have a social registry that will already have persons who are marginalized, persons who can be tipped when we have a disaster. And we even saw it playing out in the COVID-19 pandemic. We would have had this, we had mass layoffs, we had persons from the cruise ship returning home, and the governments had to find ways of these families who had no income, the persons school online, etc. We need to have that stability, guide our development. When we have a hit or we have an impact, we already have an idea of the number of persons who may be tipped over into poverty or who may need social. So we need a clear social protection policy and programs that will. But this has to find coming with our whole fiscal prudence of how we balance the social needs versus the long term, because we have to focus on the long term, we focus on the immediate needs, because the day a family cannot get some assistance if they're impacted the community, we know what the cries are nationally, and we have a fight in the region that we have to be cognizant of, respond to that also in terms of how we balance the long term. We still have to invest in our risk transfer through the catastrophic funds, the catastrophic, the credit. We have to develop our building code. Sometimes we focus, and most of our building codes are focused on hurricane during the whole geological hazards. Look at the old conferences on disaster management. Not just we have to continue to look at the science as because the year has been hotter or warmer the year before. We are seeing increased periods across the. We are on the different sectoral resilience, and every sector has a social component. An island devastated, but you have a lot of persons who are self-employed in the fishery sector, in the across the islands, especially in the Grenadines. How do you program this now? Because and that is why I think we sometimes focus a lot on the post-disaster needs assessment, because you have to bring in the social. You cannot leave it out, but you cannot think about it. Also, you have hands and programs in place so that you know what will it and how you out your risk and in the risk across with the various partners. I want how do we of course everyone has mentioned it. In our partnerships we have to partners insist on priorities. The countries have the policies. So assessment, hey, a risk assessment must be a part of it. Will this be a part of the development plan implemented? And all have to be on board. It cannot sector only. It has cross-cutting, disaster risk reduction, and climate change included across all elements of our.
Michelle is so eloquent. Thank that. Because one of the things that you pulled out there is a multi-hazard reality
Yes.
that we are facing. And I know it has an explicit way in our conversation so far. This is the epitome. You have lived it, and many of our live in it. Discussions are not just about the hurricanes, it's about the volcanoes, the earthquakes, it's the landslides that you're getting being precipitated, also about the biological hazards, the technological hazards. So it's a real broad all of government conversation. So thanks for that. And I would just encourage one again just to gather your thoughts. You'll have 1 minute for your final statement, so just get there. So go to the question on screen. So it's a question for me. Looking ahead to 2030, the outcome you hope to see from today's discussion reflected in Caribbean resilience policies or budgets. I want to say focus for SEDIMA is really about sustainable financing for resilience programming. And this is actually part of the agency's strategic plan, which covers the period 2022 to 2027. And part of that plan is really about financing of the whole resilience, which takes place through the city coordinating unit. And we've been engaging with many of our partners, discussion, the world countries, and our political directorate as well is also fully behind what we are pushing, a multi-source trust fund for the agency, which involves traditional partners like FCDO and others, but also private sector, non-governmental organizations, private foundations, which there are many globally, significant resources, and in fact, you're one of them trying to fill the gaps emerged given the geopolitical discuss a little. So this is really what our vision is. We're pushing towards this, and hopefully next year or year after, we big announcement, get ahead of myself. But this is what we're working on in the background. Recognize that challenges related to hazards, they're not going anywhere in the Caribbean, dealing with them as far as we can see, and we have to be able to sustainably them. So thanks for that question. Let me circle back to the panel. We have a few minutes before closing, so I'll ask you very quickly to give me your final key messages. With Paul.
Thanks. As we started, let me end in the same way by saying for the president and the management of the bank, thanks very much for offering us the opportunity together with SEDIMA again in bringing this webinar to the people of the Caribbean. Continue support. And it is in our DNA. As we like to say, we are the indigenous bank. We are, and we are for the Caribbean. We convert the billions we see in disasters into billions invested before disasters by aligning policy partnership. We should see resilience not at cost, but as smartest investment we can make of the Caribbean. And I'd like to emphasize, financing is central to the CDB, transforming lives through sustainable, inclusive development. And as our president must innovate and transform to enable our Caribbean to strive. Thank you very much.
Thank you very much.
Really echo and pick up on what Paul has said. The UK is rich humanitarian around the world. This is something we prioritise and something we've provided £86 million to support Sudan, delivering food and cash transfers to. We've already talked about the work we did in the Caribbean with Hurricane, how we stand together on that. But as my friend, Professor Stefan, we need to strategies and systems that reduce risk, reduce the risk of disasters happening, and reduce the cost of them when they do happen. We need to have credible before disasters happen, not after. During pre-arranged finance. Just finish on pre-arranged finance because I'm really interested in push. Passionate about, look, pre-arranged both great disaster smart economics.
Yes.
With fiscally constrained partners, fiscally constrained governments, cost of response, and making payment predictable and smoothing financial burdens. Just not only does pre-arranged finance make economic sense, it also enables better disaster response. It's a true win-win. That's why the UK has been supporting pre-arranged finance and really proud to work with the Caribbean, who are true leaders in this field. Looking at the UK worked with the Caribbean to form the and during Hurricane Beryl that provided $76 million in response to the region to grow, thrive, responding quickly and efficiently. There's a lot more to do globally. This is smaller content happening. It's far too small a percentage of the response. But we really see G7 V20 Global Shield Initiative through the Severe Platform for Action, through all of these other things. We need all of our partners, including the insurance industry, really to see how you can reduce insurance rates where things have got right. So we all need to come together more and more into that works.
Thank you. Randy?
Yeah. So, first of all, thank you, Liz, and your excellent team at CIMA for putting on such a very, very, very good webinar and event. So, and this is another, I think another good one. There's a lot that can be said, but given that we can't stop the hurricanes or we haven't found the whales yet, I think the theme of resilience is the absolute thing that we should continue to. So the insurance sector has historically been known for the post-disaster fund to be known more and more for the resilience up front. To some themes of retrofitting, we'll continue to sound the code. At some point, I hope conversations about parametric insurance that will cover a farmer and a fisherman across the region, because it's a big part of our Caribbean economy. Those are themes that I think you'll continue to hear us support resilient nations as we go into the future.
Thank you so much, Randy. And Michelle, country the last word.
I thank the EU for putting on this Funding Resilience and Not Disasters webinar. What I would say is and saying in 2020 is we can to until the impact to discuss how we are going to fund resilience. Resilience funding headed in our economy where we have fiscal prudence to ensure that we go deeper in our debt, mainly because of funding resilience. Ways of while we look at the pre-arranged financing, as St. Vincent and Grenadines has our suite of access to funds, also have to look at the long-term strategies in terms of reducing our vulnerability livelihoods and reducing our exposure to risk. While we in the changing climate, and the climate has already changed, our approach and all partners that are working in this development field and this humanitarian field to our national goals and our national priorities in accordance with our local conference along with our Sendai framework.
Statements. I want to summarize some of the key messages from today's conversation, which has been so rich. I can't possibly agree. Some of the key points that I pulled out in terms of resilience and not, it has to be centered around the fact that we are people focused and we have to do key, and that was very clear. Two, about the importance of leadership by countries and prioritization countries as well. And all of us who support our country following what the countries want. We talked about the importance of funding resilience being evidence-based. We talked about the connections with the private sector. The fourth point was around partnerships. We could not do it alone. And we talked it in so many dimensions. We talked about the importance of leveraging regional institutionalizing and making sure that governance systems in the partnership conversation as well. The fifth point was around incentives and how we leverage the enabling environment. Finally, that when we're funding, have adequacy of the finance, also that it has to be accessible. So those were some of the key points. And I know you know a lot more from the conversation as I did. So, well, I want to list who joined me today. Tom, Paul, Michelle, Randy, thank you so much for such an engaging but also